Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. To start the webinar, the Australian dollar still is attempting to try and take on the upside towards the 79.70 to 80.15. Now overnight the prices did post a high of 79.74, which still seems to be the highest level since September 17, but towards 80 cents you can see the market has clearly rejected this region. With bearish divergence in place, now that means that when the indicator is making a new high, the RSI did. With the new high coming through, the RSI never continued. So this in terms could be setting up a bull trap. Now a bull trap description is a false signal indicating that a declining trend has reversed and is heading upwards when in fact the actual currency is likely to decline. Now the move trap traders that acted on buying from the bull signal that we got here, where with the bear signal should get a rejection. So above 80 cents, I'm not a buyer, and I think the market will turn around and look back towards 79.30. Well, the dollar index did actually stage a test to the upside and got to the high on the index at 90.56 before plummeting back towards a close of 90.20. It is still concerning that the US dollar is struggling to recover from the recent losses over the last, well, the 3-year losses actually, to the lows, where in terms it actually has seen the euro stage a very whipsaw manner and posts a long-legged doji. So with a long-legged doji is that it's a type of candle formation where the opening and closes are nearly equal despite the local movement through the trading day. This candlestick is often used to signal indecision about the future direction. Now with bearish divergence also on the euro, could actually see a rejection from 122.85.95 and look back to the downside, with the support seem minor at 122.20, but I feel the market will probably take this level out, so we shall remove this, and we are looking back towards this region here, which is where the spikes come in at 121.60.70. We just move this up slightly. So anywhere towards that region, demand should come in. But with the divergence coming through here, is supportive for eventually turnaround from the recent highs, especially with the posted long-legged doji is a good indication. Well, dollar yen still continues to be on the softer track and actually looking down towards the objective of 109.65. It is viewed that the market will eventually turn around. Reason behind that is look how low the RSI is. It's extremely oversold. Therefore, I do expect to see a rebound very, very soon if we approach the 109.65 area. Well, a Great British Pound is also a little bit indecisive, but the point the market seems to be making here is that it wants to maintain in a bullish stance. And if they start pricing in a rate hike for February for the Bank of England, could actually see further gains and probably up towards 140, which is where the Brexit highs were. Support on the day comes in still 137.20.25. Well, since we had the high of 1,345 in gold, the market has respected that and did sell off slightly overnight and got to a low of 31. Overall, I still expect to see a pullback, and the reason behind that is that the upside target was at 45 and above here is 75, but because we've got some divergence, I do expect to see a pullback to maybe to 36 or down to 29 before seeing a rally or a rebound of 1,329 and take out 45 and maybe heading up towards the 51 to 60 area. Very interesting price action overnight. Now I'm not too sure if that's the actual low, but the market did plummet and took out the support at around the $17 and also around 16.80.85. With the low still being quizzed, I would say that the market is from the recovery. Should still find good demand around $16, 60.80, and could actually see a retest to the upside, but 45 is likely to cap. And wrapping up with oil, finally we're seeing some profit taking after last night's retreat on the back of thin trading due to the Martin Luther King holiday in the US. Profit taking like may see a move back towards 63.40 or even down towards 62.60 as an objective. But the indicators also in play here to support this move down. I do expect to see a bearish case coming through slightly on the oil. So that wraps up for today. Thank you very much for joining me, and I hope you have an excellent day that's ahead.